Hello and welcome to this video, and in this video I'll be explaining to you the importance of the RSI. The RSI in itself is one of the most important indicators that you can hardly do away with when trading. So many persons have used RSI in several ways, so several traders have a way of using the RSI, but today I want to show you my own way of using the RSI indicator. So if you're new to this channel, I'd like you to click the subscribe button and also click the bell button so you get notified whenever the new videos like this are being uploaded. And we upload videos like this twice at least per week, so it's necessary that you join the community of successful traders by subscribing to this channel. So quickly, let's just jump right into the reason for this video. Now in this video, I would like you to know that I'll be revealing a lot of secrets that you will not like to miss. So it's necessary that you stick to the end of this video so that you can actually understand and know how to apply these secrets for your own self. All right, so quickly jumping right in, what we want to do is simple. The RSI elementarily is an oscillator, and oscillators mean something that moves to and fro. So it shows you the swings in the market, that is, it shows you how the market moves up and down, and it shows you relative to levels, that is from 0 to 100. So you notice the normal chart only has price levels, but an oscillator shows you on a scale of 0 to 100% of what your market is doing. If it's pushed upwards to the limit, which is 100%, or it is pushed downwards to the limit, 0%. So now the default settings for your RSI is the 14 period and is applied to close. You can actually choose your own settings, but I always like to stick to the default. Now moving quickly to how we can actually make use of the RSI. Now there are 4 different ways that we can make use of the RSI, which are these 4 points I highlighted here, and I'll be going through each of them one by one. So stick to the end so that you can actually know how to use each of them for your own profiting. Now quickly, the first one is the overbought and the oversold. Now the overbought and the oversold is, first of all, the levels, the extreme levels of the RSI. The overbought region is any region between 70 to 8 to 100, and the oversold region is between 30 to 100. Sorry, from 30 to 0. That is the oversold region. And do not forget, like I mentioned, these are the default settings. You could actually change the settings to suit your own trading pattern. So it all depends on you. Now, how can you actually make use of this? You notice that whenever the RSI moves above 70, it is believed that there's so many it's believed that there are so many things that the price itself might be dropping soon. Yes, because that means it has moved to the upside and there's a probability that it might drop lower. And if you see an oversold level, like this, that is between 330 and 0, it tells you that there's a high probability that the market might reverse and start going upwards. Yes, which the reverse is for your overbought. If it pushes above 70 and is between 70 and 100, it is believed that the market wants to drop lower. So that is the first thing we use the RSI for. Now the second thing, which most persons don't normally know or do, is support and resistance. Now I'd like you to listen very closely from this point, because I'm going to be exposing a lot of secrets to you on this. Now let me quickly put in my support and resistance indicator, and if you need this indicator, all you need to do is just to check the link below. You can see there's a link here. You can see free indicators. Just click this, just follow this link, and you would get access to this indicator that I'm about to add to my chart. You can see just right. So you just this VED supply and demand. So just add this to your chart, okay, and just click OK. All right. So now you can see this indicator draws support and resistance for me automatically. So I don't need to bother myself about learning how to draw support and resistance. I don't need to worry myself of trying to know which is major level or the minor levels. So basically, how do we use this to support and resistance? Now I'll basically say that we use it in confirming precisely support and resistance levels. For instance, this is a resistance level, this red bar created here by the indicator. Now how do I know that this level here is a major is a major resistance? Now you notice that when it hit here, you can see that the price did not go overbought on the RSI. When it hit here also, the price didn't go overbought on the RSI. But you notice that the moment it hit here, it went overbought. So this tells me that I will ignore this level here, I will ignore this level here, but this level I'm not going to ignore it because it corresponds with the resistance level. So you can see that the market started pushing downwards. You can see that when the market touched this resistance level here, it pushed downwards a bit, then came back up, then touched here, pushed downwards a bit, then came back up again. But this time around, you can see that it touched here and it has started going downwards, and it will continue going downwards. Okay, let me just look for another scenario so that you could understand what I'm talking about. Okay, I don't know if I can get something. Let me see if I can get something that will explain this much better. Okay, let me put in another market so that I could actually see this. Okay, just a minute. Let's see this one. Let's see if we could get something. All right. Okay, we could get something. We actually got something here. All right. Okay, just looking at this, you can see that at this level it was oversold and there was no support or resistance here. You can see here it was overbought, here was overbought, and you can see the market started pulling down. You can see how much the market pushed down. You can see the market touched this level here, that's the support. You can see it became oversold and the market started pushing upwards. So this is how you could actually, you can see right here too, market started pushing upwards. So this is how you could actually make use of RSI to confirm your support and resistance levels. Okay, so now the third point is the breakout. This is my personal secret strategy that I basically don't reveal to persons, but because I actually want you to be successful as a trader, that's why I'm actually showing you this. Now take for instance, after you have confirmed your support and resistance level with your overbought and oversold region, you want to enter the market, but you don't just enter the market just like that. you want to have an edge of the market, and you want to have an edge ahead of the market, you know, to enter the market at a very good price. Now, so what do? Normally what we usually do is we draw trend lines. We actually draw trend lines to know the breakout in the market, but sometimes we actually make mistakes of drawing these trend lines, and we tend to draw it wrongly. Okay, so what do? In this scenario, what we do is we use the RSI. So if you're drawing a trend line on your chart, that's on your price chart, instead you draw it on the indicator itself. Now you can see that this is an oversold situation, so you look for the previous highs. You can see these are the previous highs here. Use these previous highs on your RSI and you join them this way, just this way. So after joining them this way, then you want to look for where the breakout occurred, which is here. You can see breakout occurred just right here. Now at this point, this is the point on the market, on the chart. So this is where you be entering. This is where you place your entry, just right here. Place your entry just right here, and you place your stop loss just right below your support down here. Then you ride the wave upwards. You can see how the market went up. So that is how you could actually make use of this. Let me do another example for you. Let me create another example for you. All right, look at this particular scenario. Let's look at a very good example. Okay, here we'll confirmed here already. So what do? You take your trend line and you draw the support. Okay, at this point you notice that our trend started from here, so but you could actually draw it from that level if it's convenient for you. So you could actually take it this way. You can see, you can take it this way. Yep. All right, so okay, let me make it this way. Okay, yes, this is much better. Now you notice that the market broke out here, then came back to retest here, then broke out here again. You can see. Now if I were you, what I would have done is, in this scenario, after this first breakout, I would have placed an entry which would have been here. Then the market pulled back upwards, entered the negative, but did not break this resistance level, because remember your stop loss is going to be above this resistance level, will be somewhere here, so you will still be inside the market. So after this push up here, the market coming down again, and you can see this breakout again right here. Then what do? I'll enter the market again just right here. I'll place another entry just here, right here. So I'll have two entries, then I'll ride the wave downwards. So that's how you can actually make use of RSI for breakouts. Then the last point, which is the divergence. The divergence in itself is a very powerful strategy. It's one of the most powerful strategies that we use in the market. Now, how do you use RSI to spot divergence? The RSI in itself is one of the best indicators for spotting divergence in the market. Now, how do we spot divergence in the market? The first thing is you need to understand what divergence is all about. So if you have no understanding of what divergence does or what it's all about, just go to my videos below and you go to the channel. You will see videos and on how you can actually use the divergence. There are several videos on divergence. Just use the search button divergence and you see the particular videos I've created in my channel for divergence. Now, divergence has two types. We have the hidden and we have the regular divergence. Now, in this particular scenario, you will see that here we have a divergence. You can see just right here the market pushed upwards, the oscillator, which is RSI, pushed upwards, which is here, but you see that the price kept going upwards but the RSI kept coming downwards. Now this disparity is what we know and we call divergence. So you can see that after confirming our resistance level here with the RSI, then we spotted the resistance here. Yes, that's number 2 confirmation. Then before we now enter, then we now draw our trend line. Okay, then you now draw our trend line to this level here. You can see. So then you check your breakout. That is here. So this is where you place your entry, just right here. Then you place your stop loss. Do not forget, you place your stop loss just right above your resistance level, and this is your entry. Then you ride the waves downwards. So it's very, very easy. It's one of the easiest strategies that you can ever use. So do not forget a recap of what we've learned. First of all, confirm the overbought and the oversold regions, and secondly is your support and resistance level. Yes, which is your overbought and oversold region, confirming your support and resistance. Having done that, then the next thing is you want to check for a breakout. Yes, so after checking for your breakout, like here, you can see on your resistance, you draw trend line on your resistance level, then you wait for a breakout. Then the next thing is you want to check for divergence, like this scenario here. You can see this divergence. So when you see all this in place, then you're in for a good trade. So if you enjoyed this video, I'd like you to click the subscribe button, and I also like you to click the bell button so you get notifications whenever we upload awesome videos like this twice a week. And if you like this video, please give it a thumbs up, and do not forget to also share with your friends. So I remain your boy Kai Leleke, and I will see you in the next video. Take care. Bye for now.